Welcome back. Well, a mild pullback is what we are seeing from the day's low. A few stocks are seeing some kind of a bounce back. You have Tata Consumer that's holding strong in an otherwise wobbly market. Kotak Mahindra Bank actually has cut its losses a wee bit. SBI Life as well has cut its losses a little bit. So I think some of those stocks are bouncing a wee bit from the day's low. The good news, at least as of now, if you're looking for some good news, is 23,600 has been defended as of now, at least. Let's see whether or not we can see a further up move in the last 60 minutes or so. Sanjay Parekh, though, joins us on the show to help us out, founder and CIO of Sohum Asset Managers. Hi, Sanjay. Good afternoon. Good to see you, Ben. Happy New Year. It's not too happy start to the week, though. But what are you making of this fall? I think it's an India-specific problem, right? If it was any kind of fears with regard to the virus or if it was a global issue, then we'll have other markets as well lower. But for the time being, it appears that India is under pressure. So what are you making of this fall? And more importantly, you're sitting on some cash, deploying or waiting by?
Yeah, good afternoon, Nigel. So, I just earlier you all covered on the currency piece and, if Trump were to be aggressive, how would the yuan behave? And that would have ramification again on rupee dollar. So that is certainly playing out. Of course, we don't know about this new virus, I don't think so. But there may be a little bit of jitters, But leaving that aside, we clearly have to watch what happens on 20th, what happens to yuan, dollar index. They do matter to our emerging markets and for us. RBI has been defending rupee, but there is a limit to which it can do. It's been pretty aggressive defending rupee at a level. So, and it does matter if the outlook on rupee is towards depreciation, for new flows or even for them FIIs to sell off. So this could be an interim measure. I think besides this, coming to domestic piece, our results also are not in our favor. If our Q3 numbers were better, it certainly could have been a positive scenario to counter such global issues. But a quarter three, as we see top down, and initially we're going to see previews started coming in. But if, right from banking, which used to do well, would have a 10.9% credit growth, and there's a deposit cost pressure, a little inch up on credit cost. So certainly numbers are not going to look great. Whatever initial previews that we've seen. And so will be for cement, where there will be a minor increase in EBITDA per ton, but still that full pricing power that we need to justify the valuation is not there. Then comes auto. Auto also, you've seen volumes. Maruti, we saw 1 month being good, but overall auto is still weak. CV is weak. Capital goods, surprisingly, still we're not seeing spend coming from the center. And the state, certainly because of those populist measures, have diverted some amount of funds towards those schemes and not in capex.
So, right. So Sanjay, just to go by what you're saying itself, we are in uncertainty with regard to President Trump. There is some kind of nervousness, which shouldn't be a big event with regard to that virus out there. And also the earnings season will be a little bit disappointing. So given these headwinds, what will you do? What is the current level of cash you're sitting on? And will you wait by since there are uncertainties in the future, or are you gradually deploying? If yes, in what sectors?
Yeah, so we are at 7% cash, and clearly cash is coming in because we had some commitments which we had asked to gradually get us those funds, and as we are getting it, our cash levels may marginally go up. So what we're doing is, I'll tell you the nifty view, our earnings view for 26 is we will be more like 1,200 rupees. It's too early for 26, 27, but broadly, if we were to end 1350, then I don't think we should be valued more than 20 times. So for 25, 26 at 1,200 at 20 times is 24,000. But as we look at 26, 27, certainly there's upside. So what we think is more like 10, 11% annualized returns are possible. We very strongly feel that the price correction from another 0.5% or 1% looks difficult. You can never say never, given this global uncertainty. But the time correction will happen. So that is where our strategy is keep a margin of safety. You'll get your levels. You have enough opportunities now in Nifty as well. And in mid and small cap, have a much higher margin of safety because there the fall could be much sharper. And that's where we'll gradually deploy, our equity because we're not so bearish on the larger caps, on the price front.
Sanjay, are you disappointed by the banking updates that we've got so far, either on banking, NBFCs, PSUs? What has disappointed you, if at all?
Yeah, so Nima, one is before the result preview, also the credit growth was showing up in terms of 10.7% growth. That is clearly, rightly, RBI being conservative, that please keep your credit growth in sync with deposit growth. And deposit growth, we know pressures because of several reasons that we know. So that was the first piece. And hence we've seen even the larger banks calibrating the growth. X of HDFC Bank. HDFC Bank, we always knew that it is a phase which will have to pass through, and they've been very vocal about the slowing of advances growth. So that is a transition phase which will continue for a while till they reach a CD ratio maybe around 90, which is going to take some more time, maybe 3-4 quarters. So that was known. But even other larger banks, we are able to see that growth has been going to be calibrated. A little bit of deposit cost pressure, not so much on NIMs, but credit costs could marginally go up where the credit cards or microfinance piece is higher. So that's where we are. On the positive side is again, the valuations where I think is all known. We'll see more previews. So as we see that it's all expected, we have to see whether it's in the price. And that's where we believe that some of the companies, like if you see Axis Bank, at the peak you saw at 1370.80, now it's 1060. So all of them, the larger banks, I think, could have some more fall and then they'll throw up real opportunity. And we are holding all of them. All the larger banks, we are there. So we are positive because of the valuation.
Sanjay, so, a broader question then, what else? Till there's clarity on what's happening with the market, till this FPI selling stops, the rupee stabilizes, there's too many bigger issues right at hand. The question is, right now, you are getting more favorable prices across the board, pretty much. So what would you buy? Which are the relatively safer areas that you're looking at?
I think, first, Abhishek covered it really well. But our strategy, I think, you rightly said that we'll not get great prices and great news. In fact, we always, in my earlier avatar also, when FIs were sellers, that was the best time you could buy these HDFCs of the world. Then HDFC was listed. And it was a classic trade to contra to their selling. And it works because MSCI, HDFC then was the largest weight. So here again, I think, our structural advantages remain. We cannot forget that all our balance sheets are strong. And by and large, barring some balance of payment issue that we may have, and still I think we are in control. Overall, we are in all good shape. So with that, some of the businesses, be it financials, in the larger banks that we like, both in the private and the PSU space, and even in capital goods, if we get the right levels, we would be participating. And now, as I said, you will now get a lot of choice in Nifty. Of course, we're not there in FMCG. Pharma, we have mild overweight. We will look at a stock at a price. And then certainly, broadly domestic, be it logistics, at a price, each of them would look better. But I don't think government will ad infinity stop spending. So once you see them spending and you saw the projects being announced, so each of them the potential to consume cement. So we are very, very confident that you'll see that spend start coming through from Jan till all throughout. And even the budget could be pro-capex, very, very likely. And that's where, because of this global uncertainty, if we are getting the prices right, it's better to do a bottom of stock picking, but slowly and gradually, what I think, over the next 3 to 4 months, because we get time to buy, you don't have to rush up.
Okay, all right. Since you mentioned cement a few times, Sanjay, I just keeping an eye out on Nuvoco. Today, the stock is more or less steady, while all the other cement stocks are actually lower. I think the street is sniffing that maybe there could be some kind of inorganic growth. That is, Nuvoco goes after one of the smaller assets. Let's see whether or not it's in the offing. But the stock is actually outperforming the rest of the space. So we'll wait by to see how exactly there is some M&A action that involves Nuvoco. Keep an eye on that. Well, Sanjay, final question. You have been quite bullish on select metals like Vedanta. That's not yet played out. You're still holding on to that position. There could be a lot of value that could get recognized. But for the time being, the markets are in a tizzy.
Yeah, I think globally you've seen LME, all the metal prices coming down. That's to do with Chinese uncertainty led by what Trump would do. So I think it's a transition phase. We at least feel there's a lot of value in Vedanta. As earlier discussed, there's already 43 rupees dividend in the kitty. And during such price falls, those dividend really help. You don't realize, but that 43 rupees, and if your entry price is better, is actually a fantastic outperformance. And that's where we believe, and you've been buying Vedanta, as earlier said, from 318 till even at current price. So we are pretty confident and positive as the demerger happens. There will be a focused, all the focused companies, and there will be a value discovery which will be much better than the current price. The SOTP of each of them will be significantly larger, we believe. And also the global deleveraging is helping them, and they are on that path to further get to $3 billion. So that will again help from today at, I think, little less than 4.5 times EV/EBITDA. It can go to 6.5 times EV/EBITDA.
Got it. All right, Sanjay. Thanks a lot for joining in, giving us that view. So select stocks would be a good opportunity to get in. Appreciate you joining in. We'll keep chatting with you as the course of the year does progress. By the way,